The S&P 500, the Nasdaq 100, or we're back, and we have to talk about a few things. Now, today we're actually going to start with the Russell, or we're going to get right into this. And I believe the Russell may be one of the biggest factors in the market and getting a little bit more of an understanding of a risk-on versus risk-off mentality, specifically here. Now, what I want to do really quick is go over to the daily chart so you can see kind of where we're at. You can see going all the way back basically into, the beginning of March. We had the whole fiasco with the banks. We pushed down, and we've basically ranged from 1825 to lows of 1700. Going to IWM, giving you a better visual there. It's the same low level, right? It's the same thing. Okay, so I just want to give you that example. The Russell is mostly smaller names, not really small caps, mid/small. And a good way to get a visual of what's happening with the Russell, or getting a view of the market of risk on versus risk off, or are people putting money into equities, or are they looking to play it safe, not putting too much risk on the table? This is the Russell. It's a great way, it's a great tool, it's a great index to watch. I don't trade it often, but I do follow it. And something I've been watching on the Russell, and I've mentioned here, is the daily 200 SMA, the solid blue line here. We've talked about it a lot over the past few days and weeks. We've been holding below. We've been rejected once, twice almost, 3, maybe 4, and then you had it here. Something interesting happened from Friday into Sunday, futures opening. You push up. Really nice push. Friday we closed well above. And then going into Sunday night, last night, and this morning, you push up, test the 200 weekly. Now, it's important to remember, I don't love looking at the EMAs and all this on higher time frames. I'm not a huge fan, or on smaller time frames, but I love the 200 moving average because hedge funds use it. Big money's constantly using it. So we know the relevance. There's literally ways you can track the market based on stocks above or below the 200. This is a very big level. So we can see, and you can look back here. The last time you broke above this, January this past year, you pushed up, you came down, retested, and you shot up. You went ballistic, in February. So when we look here, it's important that we acknowledge that we're a little bit below right now, but we have two major resistances here. If the Russell can start to mount the weekly, or the weekly and the daily, there's a high probability. I'm gonna tell you now, there's a high probability more money starts to flow into this market. Okay, so we need to understand that. We need to have that visual. But before we jump into anything else, I'd ask you to consider doing two things: liking and subscribing. It helps out the channel tremendously. I try to make as many videos every single week, at least one video a day, to get you ready to understand what's happening and to ultimately be ready for anything that's happening in the market. Consider liking, consider subscribing if you get anything out of this. Never feel pressure to do anything. We have a lot of free content here. We have the newsletter every Sunday. If you're interested in possibly joining the Discord, getting around a group of traders, getting around a community of like-minded individuals, Discord may be for you. It is not a place for signals, though. Don't say, hey, I want to get rich quick, this, that. No. It's a place to learn how to trade, understand trades that we're entering, why we're entering them, everything in between. But we're going to get back into the video. So how we want to start this video is, first, we're going to do a lot of technicals today. There's not too much fundamentals we need to watch. Dead ceiling's passed. I'm not worried about T-bills. I covered that in yesterday's video. That's where we're at right now. It's a blackout week. We need to understand that as well. What does that mean? No Fed members are scheduled to talk this week. It's all just kind of coasting here, okay? May have some data being released. We'll keep you guys updated on that. It's in the newsletter as well if you want to check that out for the calendar. But if we look here, let's just establish where we're at here on the chart. Okay. Continue to break highs, local highs, and mount over and over and over. We covered this in yesterday's video. Today, you got a new local high push here on the Nasdaq. And I will say, the Nasdaq is getting some love. We go to the 2 hour and look here. You're getting love. Don't get me wrong. You've made a higher high here. You're still making higher lows. You still look solid. But what I will say, you're getting some good consolidation here, right? You're getting some nice little slow movement here, right? I kind of like that we're not just shooting straight up right now. Now, granted, would I be heavy in profits? I would. I'd be really happy. But we're seeing that little rotation that we mentioned yesterday Okay, that was a big talk of the conversation yesterday, was the rotation that could potentially be playing out. For instance, ES here, you push up, you test 4305, 4300, and you push back down. You know, the key level up here is 4328, the swing high from last August. But I will say, you know, you're still getting into this range, right? We're still pushing up. So this is worth mentioning, right? We're making higher highs and higher lows. ES and Dow are still getting a lot of love. It's not bad. Okay, so far, so good. That's what I will say. Now, again, I want to leave this here so you guys understand. I don't want people to think that we're only looking to trade the upside, this or that. But for the time being, while the trend continues to make higher highs and higher lows, I don't have any consideration for shorts unless something big happens to where I want to or see some bad movement to come. But for right now, I'm looking at the upside and continued upside movement. That's my overall expectation with what's happening here. As we look at this chart, you can see you're still making higher highs and higher lows. This is the ES, the Dow. You had a little bit of downside today, but we discussed in yesterday's video where you were coming into. We've hit this level quite a bit. I mean, honestly, all the way into 14.3. This is all going to be resistance, but I do like what Dow is doing. Again, getting a pullback here, I'm not too concerned with it, right? The biggest sectors of where they're at too, we look at healthcare, we look at financials. Healthcare, where's it at right now? I want this to be really clear, right? You're right at the daily 200 SMA, the dotted one right there. Okay, that's very important that we acknowledge where you're at. You are hitting the level, getting rejected so far, but buyers are holding you up once again here on the Dow. And with these healthcare names, right? We look at XLF, right? You get pushed up, getting some consolidation. Want to see we start seeing buyers step back in. We don't just expect to go to a straight line. We want some pullback. We want some slow and steady movement. That's real health in the economy and in the market. Okay. Now giving you a visual book map as well. I want to go over a little bit here. So book map, we had some interesting action here on the day. We saw beginning of the morning, it was kind of back and forth through almost 1 o'clock. You had some back and forth movement, some upside here. Nothing huge, nothing crazy. Okay, nothing crazy, right? It's back and forth. But where things got interesting was around the dip, right? So we had Apple's little event today. So Apple has their event. Apple obviously starts to move to the downside, and the ES and Nasdaq and Dow retrace as well. You get a monster. This is around 3,300 lots that are being bought on this dip at lows. Okay, this is an iceberg order. So it starts to get fulfilled here, and then it ends about right here at lows. So we have to understand that person was loading a position. Where they ended up, where it stopped loading that position was right about here at 42.75. And you can see as well, we are holding that range. 1, 2, 3, 4, 5, just holding the range so far. Okay. And then we started to get a little love, a little bit of bounce, and then we kind of ended the day kind of flat here. Now, I'm not going to say that you can't dip, you can't go lower, but so far, I like the action that we're getting. I am a fan so far. I like the fact that buyers are trying to show up. I also want to highlight here when we go back, and this is a book, you can check them out. They're down below to see the heat map and what's happening with the market and the charts. But when you go back into something like ES specifically, again, you get the dip. And again, the chart, you could easily dip down, right? You could dip down maybe to retest 42.55. I can see it happening, okay? But the volume that's coming in on the day is kind of negligent when we look at what's happening here, right? We look at the volume. We'll pull it up real quick. We'll go to the daily so you get a better example. Your volume is still lower here on ES. Very low on the day. Nothing crazy. Even on the day here on Nasdaq, when you're getting a pullback here, right? Not a great day so far, right? When sellers try to step in, you're still seeing low volume from them. Okay, we have to understand that. All right, let's go look at Yahoo Finance to give you a visual. I like to show you as many visuals so you can understand why I'm saying things and ultimately why I'm looking at them the way that I am. We look here again, historical data. You can see 69 million. All the upside movement that we've had, increased volume, breaking out, because it's breakout volume on the SPY. Can we agree on that? With ES, look, you are breaking out, okay, into 4,300, right? A big breakout. Higher volume, rising volume on that said breakout, okay? Now it's stagnating as you're pulling back. These are things you look for. And again, it's the same thing we were saying last week. Opportunity, right? That's what we're looking at, okay? You have to do your own risk reward, manage what you're doing, But again, as you look at these opportunities setting out here, doesn't look terrible. As long as you continue to make this higher low trend over and over and over, again, you don't look terrible. I mean, you can even see you had your higher lows on the daily, but I mean, even here on shorter time frames, you still are trying to make a new higher low trend here, getting stronger and stronger and stronger as we progress. So again, I want to see this 42.55 area hold on ES to maintain this. That'd be very good. And then going on Dow, I would like to see us get back above 14.6. But again, I think as long as we hold 14.3, 14.4, we're just really good. These are still the same areas. We're performing very well. We're pushing up with ease and with minimal volume. Okay, these are things you need to be understanding and watching. Really quickly, going over a few things. With the OPEC meeting, oil ended up pushing up a little bit to start the week. As you can see, pushed up, came right back down. I'm not too concerned with energy. If we look at what's happening with oil as well, you're riding the 200 MA on the weekly as well. The white line right here, riding. If this breaks, oil probably gets slapped. Worth mentioning would be watching. It's a major support there. The DXY, you're still in that downtrend. I've been highlighting, been talking about this. You're clearly still in the downtrend on the daily and weekly time frame here. If you zoom out further, like on the monthly, you're still in the uptrend. Going down a little bit further, yields, what's happening with bonds today. You saw yields start to drop. Again, we mentioned in yesterday's video, the expectation, why I expected some of these things. Go watch yesterday's video if you want to understand what I think about T-bills and what I think is going to happen and how this is going to affect the overall economy. Okay. Yields, you're seeing a little bit of slowdown here. Okay. When we talk about what happened with the debt ceiling in 2011, what people fail to mention is what really caused the market to drop. Was it the debt ceiling rising or getting, raised again? No, it was not. It was because credit ratings got downvoted. They got downgraded. Okay. That's why. Anytime credit ratings on a leading economy gets downgraded, the credit rating on the currency, the foundation of the number one currency in the world, gets downgraded, you do not think that economy would slip. I'm just saying that's why you dipped back then. And there's a reason why people don't want to talk about that, because it does not fit the agenda of what they're trying to say or the point they're trying to get across. Because we can't say that the debt ceiling means we're going to drop if we don't mention the reason why you dropped from the last debt ceiling back in 11 or 2017 or whenever is because of what happened. In 2017, when we raised the debt ceiling, guess what? Credit ratings were not affected. And I showed you in yesterday's video what happened to the market then. Very interesting behavior. Made a lot of sense if we look at the market right now. Again, I encourage questions. I encourage questions on the channel that incite good conversation and arguments on it, but all in a respectful way. So I do encourage you guys to ask questions as we go. Again, 10-year versus 30-year. Getting a little bit of slippage coming back down, and you're rejecting off the 200 MA there as well. Nothing super big that I'd be watching, but I will say you want to see the inversion drop. That's what we want to see. Now, favorite part of the video, stocks that we love, stocks that we're liking. Okay, on Friday or Thursday, you can go look back at the video. We were holding 177, okay, on Apple. You can go back, watch the video. But 177 right here was May 31st, give or take right here. Okay. I said on that day, if you hold 177, 178, you push to all-time highs with ease. Going to this event, you pushed all-time highs today. Yes, all-time highs, you broke them. Congratulations on Apple. Okay, all-time highs smashed, broke above 185. You came dipping back down. That's where we're at right now. Not going long on Apple here. It's just worth mentioning the plan, what happened, how it worked, and ultimately moving forward here. Microsoft. I am a fan of Microsoft where it's at. Again, I'm not going long here, but if I'm day trading, it's 100% something that I'm keeping on my watch list. You're very close to all-time highs. I do believe a 344, 345 test will come soon. Favorite names, though, on the list right now. Amazon, number one. I'm looking for a 200 MA test at 132. I believe XLY looks very good also. XLY, consumer discretionary, very, very good. You're above the 200 MA on the weekly as well, and you want to keep climbing. We like this. Names like Amazon, Tesla, those are big names in that specific sector. So Amazon, number one on the list. Two, we still like Google. We mentioned it in the video as well. You're trying to break out here. You're very, very, very close to breaking out here. You go like the 2 hour and see. You are really trying to hold. So as long as you hold 126, you love this. You're still making higher lows. You want to see that breakout. We love what's happening here as well. Tesla, I still love Tesla. I still think the swing opportunity is there. Obviously, when we mentioned this, it was around 190, 200. It's not as good as an entry as it was then, obviously, right? So I'm being vigilant. I'm watching it. As long as you're above the 200 SMA, I think you look great. Okay. A retest of 214 might be your best opportunity. I also mentioned this on Friday's video as well. My last one is going to be Netflix. I posted this on Twitter earlier and I gave people a pretty decent trade if you wanted again for the day. So one of the most exciting steps right now, mounting to SMA weekly is no easy task. Last name we liked that did this was Tesla at 180, which is true. If you mount the 200, which is around 404, 405, I think there's real room to start running here on Netflix, okay? We look at Netflix. So when I mentioned that, we were at 407. Obviously, we broke above around 406, 407. Ended up pushing to 414, 413, okay? We're back down at the 200 SMA on the weekly, right? We're sitting right below it. If you can hold this level, I like it for a data position. Also mentioning here on Netflix, a lot of people are still sleeping on it. I think their next earnings have a lot of room to heat up based on the new ad tier and everything along those lines. And they also actually released the numbers on how many subscribers they have there right now, which is still looking pretty good. On the daily time frame, you have a gap at 506.81. But even with a conservative target of 460, 457, I still think you look really good. Okay. This is what I like. These are my favorite names. I'm trying to go through them as quick as possible, but that's what we're looking at. Last thing I'll cover also is going to be VIX. Everyone has questions about VIX because I don't know. People just are like saying really random stuff online about because they don't understand what happens with volatility indexes and the derivatives market. If you look at the VIX, what's happening? You're sitting at 2021 levels. What happened when VIX was there? I will continue to say this and scream this from the rooftops. As long as VIX stays in these levels, you are bullish, bullish, bullish. If you would like to hedge positions, VIX is a great way to hedge that position. But I will say, when VIX was at these levels in 2021, go look at what happened to the market. Okay? Just go look. I don't care. Go look. Your answer is right in front of you. Very bullish behavior happens typically here. Understand that. Go back and look when we were back here, back in 2019. Again, it's all there for you. Okay? Don't try to predict the future. Use what's in front of you in the present to make your trades. That's how you day trade. That's how you scalp, right? If you're trying to swing or be an investor, it's totally different. Go play those. Okay? But you have to understand the difference in what's happening here. Okay? Right now versus 3 months versus 6 months, those are all different types of trades and different things to be looking at and taking into account. If you have questions, comment down below. We're going to be answering those all night long. Have a good one, traders.